Good morning, good afternoon, good evening, everyone. Welcome back to the breakfast show with myself without a co-host today. Yesterday was a good day for Oscar, so we're trying to keep that experiment alive and well. Jose is not going to join us right now, but good morning to everyone. We have a lot of things to cover in this live stream. We had Netflix report earnings yesterday. Stock is down around 7%. We have Vertiv report this morning. Pretty good quarter. Then we have a lot of AI names: Iron, Nebius, CoreWeave, Cypher. They're all down. Especially Iron is down a little bit more in this pre-market action. We have some good news with regards to Google. Might not be great news for Amazon, but I'll explain a bit more on that front. Right now, if we actually look at the pre-market action, it's not that bad. It's not that bad. We've had some red names, but all in all, I mean, Netflix is the big red name out there. I didn't really think that the report was that bad. Yes, they were hit with a one-time margin hit because of something that happened in Brazil. We're going to talk about that in a bit, but they said it's not something that's going to affect them moving forward. So that's good. Amazon is down 1.2%, whereas Google is up 2.2%. The reason behind this is because of a report that Nflx might go to Google. I'll actually try and pull up the report real quick. Just remember that Google and Amazon are big Nflx investors. So yes, okay, if Amazon would have gotten that deal, or according to the report, that would have been something bullish for Amazon. But Nflx becoming bigger and bigger is a good thing also for Amazon. Would have been great if Amazon got the reported deal, and this is basically it. Nflx in talks for Google Cloud deal worth tens of billions of dollars. Amazon and Marvell are negative on the news. Broadcom was positive yesterday because apparently Nflx is going to be one of Broadcom's new big customers out there. But this again shows how big Google Cloud is going to be. I'll remind you, Google and Amazon, huge investors in Nflx. I do also believe that Nflx does already use AWS and Amazon Trainium. Okay, so you might say, okay, but it would have been better if they continue to use more and more. I agree, but I guess they wanna diversify. Plus, I think most of us agree that there is NVIDIA, and then there's also Google TPUs. When you look at the total cost of ownership, performance-wise, I think Google TPUs are the one that will compete with NVIDIA the most, it seems. So This is basically the news here for Google. It's very good. I still view Google Cloud's business as one of the main reasons why you should keep on buying a Google stock even after the recent run-ups. Again, this is not a recommendation, but if you had that question, oh, should I buy before they report earnings? It's up since $140. I still view Google Cloud as a business that will become as big as AWS, maybe even better margins in the future, who knows? And that alone can be worth $1 trillion. There is an Amazon video coming out later today talking a bit more about Amazon going into the next earnings report, next Thursday, that is. And I had a question, basically, maybe I could ask this question right now as well. AWS. AWS is a business that is now generating on an annualized run rate $123 billion. $123 billion. Last quarter operating margin was 33%. 2 quarters ago was 39%. How much would you be paying for such a business? Would you put a 10x sale multiple on it? Would you put more? Would you put less? Because that's basically what you should be asking yourself when you look at Amazon, a company worth over $2 trillion. But I would say that maybe 50% of that $2 trillion or so is AWS. And so all the rest, the advertising business, subscription, online stores, third-party seller services, Zooks, Project Cuppers, pharmacy, all of that is what you get for the extra $1 trillion that you're going to pay. Amazon is actually worth $2.3 trillion. So out of that $2.3 trillion, how much is AWS going to be according to chat? Let me know. Then let's have a look at some of the names right now. So yesterday, Oscar, we ended the stream. Oscar was red to flat, and we ended the day up 7.8%. Maybe it's because we were off stream. That's why. AST is taking another hit, down 9% right now. So it peaked at 100. Now we're back here at $71. Again, the trend with these types of names is very clear. You go up rapidly, you will then go down rapidly as well. An iron, for example. Iron is now down around, let's call it 30%. Let's call it 30% from the peak, okay? But iron is also still up 100% since the start of September. Iron is also up 10x since the bottom in April. And so when you start to look at this, and then you start to look at the reaction of certain investors, traders, speculators, whatever you want to call them, you need to understand that this is not something normal, right? Going up 10x in 6 months or so, going up 100% in a month and a half. It's not something normal, especially here. Yes, we've had a couple of updates from the company, right? They have more GPUs, etc., etc. That's fine. But it's not like they got a contract worth tens of billions of dollars. It's not like AST or some of the other names are suddenly generating tens of billions of dollars in revenue. No, the story is still evolving. People's expectations were just not very realistic right now. And so, yes, you're getting pullbacks. Stocks don't go up 100, 200, 300, 1,000% every single month. You will have pullbacks, and pullbacks are, of course, healthy. Is the story broken? Well, that's probably also a question that you ask. Is the story broken here with iron? Is the story broken here with AST? Maybe where is Nebius? Nebius, I don't think is. No, Nebius is actually up this morning. There was a little announcement from AV, right? But Cypher as well. And Cypher is one that actually got a small, let's say, deal. But is the story broken? I don't think so. I don't think the story is broken. The stock was broken, but broken on the positive side of things because it kept going up. But it kept going up based on, yes, maybe FOMO, good momentum, maybe a lot of people hyping it up, retail, whatever. But fundamentally, the big catalysts are still to come. A co-location, co-financing deal, whatever you want to call it, still to come. Don't know when, but it will come. Same with the GPUs. How many GPUs are already online? How many GPUs have they been acquiring? With Iron, I think also right now, since we're not getting these monthly updates anymore, maybe that's also putting some, let's say, fuel to the fire, because usually we would have gotten our monthly updates and we knew exactly what was going on. Right now, we are, let's say, flying blind. Though we're not really flying blind because we got an update from Iron not that long ago. But with these types of stories, it's either you're in it for the long run because you think that the thesis for the long term is XYZ, then you're still in it. Then you're going to say, okay, this pullback is nice. Back to reality, we are flushing out the weak hands, so to speak. But if you thought that this thing would go to 200% just because they are an NVIDIA preferred partner, just because their logo popped up on the screen during a CNBC Jensen interview, then I'm sorry to say, but you don't know what you own. You basically only own it because maybe you read on Twitter, or sorry, X or Reddit, that this stock can go up 100x or whatnot. You did not really listen to what the CEO, the co-founders have been saying. You did not really read the transcript. You did not really read the investor presentation. No, you just think that, oh, green candle goes up, I have to keep buying. But no, that's not how it works. And again, with an Iron, I specifically talk about Iron because I also own Iron. I own CoreWeave and Nebius, but those are not down as much at the moment. And plus, CoreWeave and Nebius do have already some major agreements and major deals. But with Iron, don't forget that it is something that I will keep repeating so that people don't forget it. Having connected or contracted energy or whatnot and owning the land is good. That's one thing. But the other big piece of the puzzle is, of course, the money making one. And that's, well, the actual data centers with GPUs running. GPUs aren't cheap. To reach 60,000 GPUs, to reach 600,000 GPUs, or over a million GPUs, it will cost tens of billions of dollars. Something, of course, that Iron does not have, at least not now. Of course, along the way, as 23,000 GPUs go online, as they grow that, they can generate cash. There's something floating here. They can generate cash more and more, and that can finance it, or they can have co-financing deals. Meta recently announced one with Blue Owl, and I believe I've seen a report that BlackRock might also invest in that. So these things will happen. But forget about the fact that this thing will go to $200 just because. There is no such thing as, oh, just because, oh, NVIDIA is going to announce that they are investing in Iron. Who said that? It's just made up stuff that doesn't exist at the moment. Iron is a preferred partner. There are a lot of other preferred partners out there. So making up stuff to try and justify why something needs to go up more and more and more after it has already gone up 10x, to me, makes absolutely no sense. And yes, I like to see these pullbacks. I like to see these pullbacks because it does shake out the ones that don't actually understand what Iron is supposed to do. They don't actually understand what the Nebius is doing, etc., etc. Right here, we have also a pullback from the peak, and I've seen some posts on X, but from people on Reddit, like, oh, I'm selling out of this meme stock. This is a trash stock, etc., etc. Okay, it's probably people that did buy at 120, 130 dollars or so, because, oh, we've had the huge jump already, then of course it has to go even higher, right? It's not enough that we went from $21 all the way to $140 in 6 months. Now, that's not enough. We have to go even higher without anything fundamentally changing. Why? Just because, right? Just because. There are a lot of grifters out there, a lot of liars, and maybe even potential bag holders that just want to unload their bags on future bag holders. But the most important thing here, again and again, is to know what you own. You know why you own Nebius, you know why you own CoreWeave, you definitely have to know why you own Iron and why Iron will not go to $200 anytime soon. It will only have a huge jump if it can get, yes, maybe a Microsoft type of deal of $17 billion, although I highly doubt that's going to happen anytime soon. Or maybe, yes, we do see NVIDIA invest in the business, loan them money. I mean, you know the scheme, you get the money, you go buy the GPUs, and then the GPUs goes back to Iron, etc., etc. Then yes, things can change. Why? Because the business fundamentally has changed and accelerated its growth. That's it. that's the end of the rant here for now. But I'll have a specific shorter video discussing everything. I have also a couple of other things I want to show, so a lot more people can get the information. Now, quickly touching on the Netflix side of things. Netflix reported, of course, yesterday, revenue in line with the expectations. Julian, I think some people think it is overvalued at $70, so we sold out. Again, I'm not one to blame you for selling out or anything, but my question is, if you entered earlier, why? I took profits, right? I took profits at 66, but I didn't sell out because I bought it at 16. I bought it again at 22. My average is around in the 20s, so I'm fine with that. Why would you sell out? Would you only sell out because it's a trade, or you just don't believe that it should be trading at $70 even 2 years out? Risk management is taking profits. Completely selling out of a position because the stock has gone up too fast is maybe trying to time it, in my opinion. So Netflix, and there are also some reports with Netflix now that Warner Brothers apparently is looking to be acquired. I think if Netflix can get that deal, that could be quite big. I don't know how much that will cost them, but that could be quite big. Now, the big issue with Netflix quarter is this: the operating income would have exceeded forecast. It came in way lower. If it weren't for that one-time Brazilian tax expense, it's an expense that actually already they calculated from 22, 23, and I think only 20% of it is from 2025. They're on track to double ad revenue in 2025, and I think 2026 is also going to be a huge year for Netflix when it comes to advertising, which again is, in my opinion, a side of the business that, yeah, the stock is worth $1,144. This is still a company that will grow revenue, will expand its margins, will grow its free cash flow. They won the streaming wars. You might not like the content or some of the content on it, but I think they are the king of streamings. It's true that a lot of the movies or TV shows on there are literally just plain trash. It's something that you put in the background and nobody really watches it, but it is what it is. But all in all, the report for Netflix, in my opinion, was okay. Maybe the stock was priced to perfection, then that's why you're coming down a little bit. But all in all, I think this quarter was a good quarter. Now let's wait and see if they do acquire Warner Brothers. I think there was also another player out there that was interested in that, but Netflix, I see them continuing to grow steadily over the next couple of years, becoming more and more profitable as well. This is one of my my regrets of not buying here. You can go back on the channel. I talked about it when it started to crash $200, under $200 after Bill Ackman bought and sold. But yeah, can't catch them all. It's a company worth $500 billion. It's not the cheapest company out there, but it's a very good one. It's a very good one. So that was Netflix yesterday. Today after the close, we do have Tesla. Now before the open, we had Vertiv today, and Vertiv is up 7.8% right now pre-market. If we go here and get the AI summary for the company, or we can just look at the slides. Maybe that's even. Let's have a quick look at the slides for Vertiv. We'll touch here on the tariff story already. So the tariff situation remains an uncertain. Projected tariff impact in current guidance higher than prior guidance. Okay, due to announcements post July 28, including country-specific tariffs and steel and aluminum derivative. Okay, so this is one of those companies that really keeps you up to date when there was this whole tariff situation. Even 6 months ago, they were the first one that put out a chart, a slide with all the possible scenarios. So pretty good from their part. So third quarter earnings per share was up 63% year over year. Net sales up 28% year over year. They're raising their full year adjusted free cash flow guidance to $1.5 billion. Third quarter adjusted free cash flow was, is here, $462 million. They're also raising their full year adjusted EPS guidance. That's up 44% year over year. Vertiv as a whole is performing very well. And of course, if Vertiv is performing very well, then I think maybe the fears of this whole AI data center build-outs and whatnot can calm down a little bit. This is a very good company operating quite well. What has the stock actually done over the past couple of months? Let's see, because we've seen when it crashed. Heck of a. So it crashed here. Of course, the April low was $54. Since then, well, it has gone all the way to now $187. So all-time highs pre-market for Vertiv. Not bad of a run-up. And again, they deserve it because they are executing. They're executing quite well. Let's actually see if I can find how much they've beat. Yeah, I usually have these posts. Let's see. We're also going to touch a little bit on Intuitive Surgical. They also reported yesterday, one heck of a quarter again. So congrats to everyone that have been picking up shares when Intuitive was much lower. Trying to can't find this one. So let's maybe start with Intuitive. So Intuitive Surgical is this company right here. We touched a little bit on it when it dropped. Had a huge pullback, tariff-related stuff, etc. But then, look at this. Look at what has happened yesterday. Stock is up almost 20% pre-market. 20% pre-market. And the stock dropped. It was not the cheapest stock, even with this pullback. But again, this is a company that is never cheap. And it shows. Look at the market's reaction right now. Incredible. So that Intuitive Surgical, where is that report? Let's see, let's just do Control F. For some strange reason, it's not here. But okay, let's do the easy part. So Intuitive Surgical company is up 18.5%. And these are the results. So total net revenue was up 23%. Pro forma EPS up 30%. Worldwide procedures, 20% was up 20%. 19 of it was Da Vinci, 52% growth in Ion, but that's a much smaller base. Da Vinci system placements, 427 systems, including 240 Da Vinci 5s. Install base, 10,800 systems, that's up 13%. Ion, 950 systems, that's up 30%. Again, much smaller base. Recurring revenue, 85% of total, grew 21%. Cash and investments, $8.4 billion, $1.9 billion in share repurchases. Why is that? Well, because the shares they thought were undervalued in the $400 area. So incredible performance. Incredible performance by the company, by management as well. I just want to show you one key performing indicator. That's this one right here. So this is the Da Vinci system installed base over the years. Look at this, a compound annual growth of 12%. So the more this grows, of course, the better for them when it comes to recurring revenue. Last quarter that did, okay, the growth rates are coming down, but then you're going to have easier year-over-year comparisons. Great company, great quarter. Congratulations to all shareholders. Let's have a look at the others. Can you review the applied digital contract? Do we have a new applied? We have a new. Indeed, we have. Indeed, we have. So Applied Digital announces $5 billion AI factory lease with US-based investment-grade hyperscaler at Polaris Forge. Okay. Let's see if we can find more info on that. What is the stock doing? Okay, so now the stock is up 5.3%. 5.3% pre-market. Let's see. So Applied Digital enters $5 billion 15-year lease agreement for AI factory with investment scaler in Harwood, North Dakota. This lease represents approximately $5 billion in total contracted revenue over an estimated 15-year lease. So previously with the CoreWeave one, that was first $7 billion, 15-year, that's now up to 11. So here we're adding here another $5 billion, but from another company, of course, and covers 200 megawatts of critical IT load purpose-built to support the hyperscalers' AI and high-performance compute infrastructure. The hyperscaler also holds a first right of refusal for an additional 800 megawatts, of critical IT, representing the full expansion potential of the 1 gigawatt Polaris Forge 2 campus. Okay, interesting. With this agreement, Applied Digital total lease capacity with two of the world's largest hyperscalers across its Polaris Forge 1 and 2 campuses in North Dakota has now reached 600 megawatts, reinforcing the company's position as one of the fastest scaling builders of AI infrastructure in the United States. Not bad at all. Not bad at all. The stock is only up 5%. Why? Good question. Probably because already a lot of it is maybe baked in, but this is definitely good. This is definitely good for Applied Digital. Again, don't forget, we started with what was it, $470 something million per year for 15 years from the CoreWeave announcement. Now you're getting here another $333 million per year in that 15-year lease. So you add this plus the first deal with CoreWeave, you have already over $1 billion per year for 15 years. But we know that with CoreWeave, that's now already up to $11 billion. So not bad at all. Not bad at all. $5 billion in 15 years, maybe it is underwhelming. Yeah, but it is only the first part, right? We're only talking here about 200 megawatts of critical IT load. Remember, the same thing happened with CoreWeave. It started with 7 billion in 15 years, and now it's already up to 11 billion. So they start here. It can always go. It can always go higher. Again, underwhelming. I mean, it's revenue that wasn't there before. So you're getting that revenue right now, and I don't think many people will complain. And this is what we were saying before. This is what you want to see for these types of companies, right? This is what you want to see for the irons, for example. Actual money, actual deals that will generate them billions of dollars in revenue, not made up hopium post to farm some impressions on X. No, actual deals. I think if Iron can get a $5 billion 10-year deal or 15-year, whatever, I think that would be great. That would be great for the underlying business. What does Applied Digital tell us? Maybe they told us a little bit more on their website. We'll see. Okay, so they tell us right here. The initial 200 megawatts are phased within 2 buildings, expected to begin to come online in 2026 and reach a total of 200 megawatts in 2027, with the campus being designed for future expansions. Okay, so again, we can start to calculate what is 5 billion 15 years. It's $333 million per year. But again, it will only reach that numbers once it's fully operational for that 200 megawatts, only in 2027. But again, it's still money. It's still money that comes in that business. I don't think anyone or any of the holders will complain. This announcement, of course, follows a period of record-breaking growth and notable achievements for Applied Digital, including an additional 150 megawatt lease with CoreWeave, a $5 billion AI infrastructure partnership with the MAM, the Macquarie Asset Management. I think that was a week or two ago. Actually, no. weeks ago when they reported earnings, and several industry and community impact recognitions, mostly recently the other etc stuff right here. So good news, definitely very good news for applied digital. Touching here, okay, so I went back to the other CoreWeave announcement. So this one right here. So this was announced at the end of August, and let's see how much money, how much revenue they can generate from this. So for an additional 150 megawatts, this new lease agreement of Corey brings Applied Digital total anticipated contracted lease revenue to approximately $11 billion, which includes $7 billion in revenue from the initial two approximately 15-year leases executed in May of this year. Okay, so it's two of those. With this new long-term lease agreement, the total critical IT capacity across these three long-term lease agreements will encompass 400 megawatts across Applied Digital. Okay, just wanted to make sure the length of each deal. But okay, and here as well, it's under construction, and it's expected to be operational in the middle of 2026. So no, it's not going to be the next Victor here. Applied Digital next earnings will go crazy. I think we will have to wait a bit more than the next quarter to see this impact. Where do I get my news? On X, two great accounts. One is this one right here, Wall Street Engine, very, very good account. And the other one is this one right here. Also a very, very good account that shows you sometimes a good summary here, for example, of what's happened pre-market, and also when there are analyst updates and notes. He has a very nice summary of those. Let me actually pull one up. Like, for example, here you have buy ratings, price target changes for Netflix, for example. And then you have this. Okay, this is Intuitive Surgical, already an analyst note after yesterday's earnings report. Very, very nice summary. The change, price target, current price upside, key takeaways, risk, valuation context, analyst sentiment, and then the analyst comments. Very, very good follow on X. And then the rest is, I don't know, whatever pops up on the feed, I guess. But these two are very, very valuable. I guess maybe another one would be, let me pull it up. Substack's less. Substack is more for certain deep dives, like the one that Emir does, or Palantir Bullets from Arnie. But other than that, not really. This account is also not bad at all. Gives you some quick info, analyst update, price target upgrades, whatever. For example, here, Google Citizen GMP, little Google comment. Yeah, so that's the one. That's the one. And this one here on the screen is also a good one. Then there is also the big one, like the Walter Bloomberg one, which is basically the Bloomberg terminal given for free on, well, not really a terminal, but it's a lot of news. But these two really focus thoroughly on the stocks. So that's good. Actually, one extra one is him, Evan, Stock Market News. Probably seen him already. This guy right here, Stock Market News. Why is my page down so much? This guy, also not bad of a page. Not bad of a page. Did you discuss the Uber investment in AV right? Nope, that was what we were about to do right now. So, as you know, Nebius owns AV right. Nebius will report also earnings November 11 before the market opens. November 11. That's the official date. Let me actually pull up Avirite press release. So Avirite, they secured strategic investment and other commitments of up to $375 million backed by Uber and Nebius. As you know, I'm a big bull of Nebius and I'm a big bull of Uber as well, because I do think that Uber becomes the platform where all of these autonomous vehicle companies are going to, or almost all, are going to list their fleet on the platform. Plus, Uber does invest in a lot of these companies as well. So the transaction totals up to $375 million from Uber and Nebius. It builds on Avirite's commercial partnership with Uber following the signing of a multi-year strategic agreement back in 2024. The launch of Avirite, and by the way, Roberto, thank you for the super chat. The launch of Avirite's robotaxi service on the Uber platform is planned in Dallas by the end of this year already. Avirite's delivery robots are already fulfilling orders through the Uber Eats platform for hundreds of restaurants in Jersey City, Austin, and Dallas. The new funding will enable Avirite to accelerate the growth of its fleet, support AI-driven product development, and expand its offerings into new geographies. And Nebius CEO said, "We are delighted to welcome Uber as a strategic investor that shares Avirite's vision and will enable the company to move further and faster in pioneering AI-driven autonomous transportation." Comment here from an Uber, a global head of autonomous mobility. "We're excited to continue deepening our partnership with Avirite and look forward to introducing their impressive autonomous driving technologies to more people in more markets." And then the CEO of Avirite said, "At Avirite, we share a clear vision and a strong plan to make autonomous transportation an integral part of everyday life. We are thrilled to have world-class partners like Uber who share this vision and continue to support us." So again, people forget that when you buy Nebius, you get Avirite, you get a little bit of the other, right, of Toloka, of Triple Ten, of ClickHouse as well. ClickHouse, I think when that thing goes public, you will see a huge re-rating of Nebius business, because Nebius last time that they reported was, well, the reported number was that they still owned 28% of that. And so 28% of a company that will go public at, I don't know, 20, $30 billion or so is quite a lot, right? It's quite a lot of value for Nebius and as shareholders as well. I actually saw one of the, did you say hello to the robots? Always be nice with robots, because you never know what might happen in the future. Do you think CoreWeave, Nebius, and Iron are a buy at current prices if one is not exposed? If one is not exposed to neo clouds. Look, if you were looking for a pullback, I know my answer might also be a non-answer for a lot of people, but if you're looking for a pullback, you're getting it. Okay, with Nebius, you're getting a 25% pullback. I bought Nebius last Friday, so it's down a little bit more. Right? It's down another $5 since, but you got your 25% pullback. If you're looking at, where is it? If you're looking at Iron, you're getting close to 30% pullback. So again, if you wanted to see pullbacks, you're getting those right now. CoreWeave, same thing here. I assume if you only look at the top, it's down also 20% or so. So if you're looking for pullbacks, you're getting the pullbacks. The prices today are, of course, better than before. I've seen someone on X yesterday. Nebius at $80 is better than Nebius at $140. And I'm like, yeah, okay. And Nebius at $20 is also better. Statements that don't make any sense. But to me, like I said, if Nebius drops even more under 100, I'll keep accumulating more and more shares. With Iron and CoreWeave, especially with CoreWeave, I'm fine with the position that I have. With Iron, since it's the only one where, one, I'm up significantly already, and two, it's the only one where fundamentally not that much has changed deal-wise, huge contracts and such. So I have time with that, but would I start to nibble under 50? Probably. the big question. QNC, thank you for the super chat. What would you buy as of today for 10K? Ooh. I mean, I guess based on the video that I released yesterday, I think the answer is quite simple, right? It's probably this one right here. I know going into the earnings it might be risky, but risk reward, or I can pick different stocks, I guess. If I can pick different, then yeah, I would put a bit here in PayPal. I'd put still in Amazon. I'd put in Google, and probably the local as well. Probably the local as well. But yeah, you know me. I like PayPal, and it's down 1% pre-market. Yesterday it was up 1.2%. So I guess it makes sense. What goes up must come down with PayPal. But if I had to choose only one, then it's PayPal. If I can choose more, probably yeah, Amazon, Google, the local still for sure. Let's see if I can. I don't think I've seen anything PayPal related. So just because yesterday, stock was up a little bit, and we were back above $70, and so the market is like back above $70. I think we have to pull you back down. Please review. What is this? Is this Kraken? Yes, it is. Huh, I'm so good. Please review it. I know I didn't make a specific video about it, but I did touch a little bit on it late last year, beginning this year, because I found out that they have Anduril as one of their customers, which is one of the reasons why this thing has gained in popularity and has gone up quite a lot. But if you do a little bit more research, you will see that this is still a tiny company. And if Anduril was really a huge customer of them, they would have generated a lot more revenue right now. It's definitely an interesting company. Which is why I first looked at it. But I do think that here again there is a lot of hype and future hope included in this one. No Adobe or CRM. I still don't have it, but just if I had to choose one of these two, I would probably side with an Adobe, just because, well, one, it is growing a bit faster than Salesforce right now, though Salesforce did tell us that they are expected to grow faster and reach $60 billion or so by fiscal 2030. Both of them are very cheap. Okay. Both of them are cheap. Both of them are high margin businesses that are buying back shares, lots of free cash flow. And yeah, it's definitely, in my opinion, very cheap, but I'm not going to include it in my portfolio right now. Ad blocker detected, but my ad blocker is not even on. Oh, no, it is on. Sorry, it is on. But yeah, no. Adobe and CRM, again, if I had these companies, I would probably be buying a lot of shares right now, but I don't have it. So I'm not planning on opening new positions. I just did it with Rubrik and Shift4 a couple of weeks ago. No point in me opening up positions every couple of days just because stocks are cheap. Plenty of stocks are cheap. But it's not Pokemon where you have to catch them all. Rubrik yesterday did go back above $80, but I'll be happy if it stays above the 200-day moving average right here. For Shift4, where is it? It's probably still in red, or right. I don't know, green pre-market. Okay, Shift4, let's see. It did break out of that uptrend line that it started a while back. We'll have to make our way back up as soon as possible, I guess. For I own shares, so it's not an option play as soon as possible, but to go back in that trend, we have to go back up. It was oversold back here, $73. Again, these are two companies, Rubrik and Shift4, that as long as they stay in those price ranges, I will continue to accumulate more and more. I'm baffled how PayPal is able to remain low for so. Yeah, I know. It's crazy. It's crazy. I guess the wall is really at $65, $66 or so. With the it they could have defended $70 if they would have accelerated buybacks. I'm pretty certain about that. The fact that it is staying this low and not going lower, yeah, means that they are buying back shares, but maybe not as much as I would like them to. But we'll see. We only have to wait a week until we will find out if growth is accelerating and if they are going to be a bit more aggressive with their own guidance. With their own guidance. At least in my country of residence, Czech Republic, PayPal is nowhere to be seen in both online shops. Revolut, on the other hand, is everywhere for P2P payments. Yeah, okay, but P2P payments, Venmo is only available in the US. And again, PayPal, you don't have to see it, although I'm okay, I mean, I'm not pretty sure, but it's probably on some website. But you know that PayPal, the PSP side of things, the Braintree side of things, you don't see it. It just happens to be processed by PayPal, PayPal's infrastructure. You don't have to see it, just like you don't see Stripe or Adyen in a lot of places. But the payments are being processed by those two companies. And the majority, I mean, last quarter, what was it? 44% of PayPal's TPV is the payment processing. It's not the branded checkout. It's not the branded checkout. PayPal going $100 would be nice. You don't have to tell me. If PayPal reaches $100 by January, we're throwing a party, ladies and gentlemen. We are throwing a party. I mean, I say ladies and gentlemen, there are only 7.5% ladies watching the channel, but still better than zero, I guess. Chris is doing us a favor. He sold his PayPal, so it could go up for us. Thank you for your thank you for your sacrifice. Yeah, I mean, Germany is a huge market for PayPal, and we've seen yesterday that PayPal acquired, what was it, 41% of a where is it? Here, Roy here with the goods. So yesterday there was this announcement. PayPal is acquiring a 41% stake in German digital commerce company, up from 11%. Shopware has been a long partner of PayPal back in 2023. They had over 20,000 merchants and Shopware integrated with PayPal, who did more than 5 billion in payments annually. So a good move by them. Germany is a huge market for PayPal. We've seen the numbers there as well for the debit cards growth, insane growth for PayPal in that market. And apparently, someone did share this. So Shopware reports exponential growth in North America for the first half of 2026. They reported triple-digit year-over-year growth in the United States in the first half of 2025. Again, this could be a very good move, but I mean, could be. I don't think that they're doing these types of acquisitions, especially Alex Chris coming from Intuit, where he did make a lot of acquisitions, but strategically very smart ones. Here, investing in, again, a German digital commerce company, seeing that Germany is their biggest market in Europe, makes sense, makes total sense. Then you start integrating everything that PayPal is working on. It makes sense. What will happen with PayPal's stock price if buybacks continue? Well, the stock usually goes up significantly as there are less and less shares traded in the public market. That, of course, does artificially pump up EPS. And so that there is this slide, the magic of buybacks. I think if you buy back 50% of your shares, the stock goes up by 100% or so without any multiple expansion or anything like it. Once you go above 50%, things start to look very, very interesting. Very, very interesting. All right, let's see what else we got here. Where is it? Wall Street Engine. Let's see if we've got some more news for you. We do have a CPI report Friday, I think. on the 24th, if I remember correctly. Tesla is reporting, of course, after the close. We do have here some prediction markets. Will Tesla beat quarterly earnings? 83% chance of beating earnings. I did also see that Kalshi reach an agreement with the NHL to become the prediction market partner. But I'm quite confused because I thought that prediction markets were not legal in the United States, or at least in some states. Am I mistaken or not? Apple hit with EU antitrust complaint over app. Okay, where is it? Fresh EU, of course. That's how us Europeans actually make money, by fining tech giants from the United States. Polymarket has signed a first of its kind licensing deal with the NHL, allowing it to use official league trademarks like NHL, Stanley Cup, and team names. The agreement gives Polymarket legal rights that additional sportsbooks like DraftKings, FanDuel have long held. So I guess good move for them. I still think, and maybe I'll cover DraftKings in a bit, because DraftKings, they've announced that they're also buying a prediction market company. The thing here is, again, prediction markets are a gray area. Yeah, so that's the thing. If it's a gray area, it can be that, I don't know, a couple of months from now, suddenly you cannot operate anymore if you're not regulated. Or am I mistaken here? It's, I don't know. It's a loophole to get around gambling laws. Yeah, but isn't there like a lawsuit going on right now against Kalshi or Polymarket or just these types of things? Because I mean, it's a pretty big deal, right? If you're making so much money thanks to those prediction markets, which are basically gambling, what happens if one day suddenly you lose the lawsuit and you cannot do this anymore? Your business goes down the drain, I would assume. 2 states have launched. Okay. Sports betting is illegal, but I can use prediction markets on Robinhood. Yeah, again, because it's probably like a loophole for now, which is why it's working. Interesting stuff. I'm a bit nervous about iron. My average cost is 59.40 and I'm down a lot of money. Should I average some down? Do you think it's going to bounce back? Again, when I get asked these types of questions, I just ask the questions back. Like, why did you buy at 59.40? Is it purely because you thought it would go to 200 next week, or did you like the business? If you like the business, then you should know what to do when the stock is much lower. DraftKings has no pricing power, race to the bottom, squeezing their margin, no moat. Well, does any of... I don't think that sports betting has a moat, right? Unless, I mean, the moat is probably getting regulatory approval and here, official league trademarks and stuff like that. I mean, that's a competitive advantage, but not every business needs a moat, I guess, to make money. But DraftKings as a whole, I mean, let's see, DraftKings. It did drop, of course. I mean, it dropped not today, but over the last couple of months. $16 billion in market cap, gross 43.2, free cash flow margin 9.3. Let's see what free cash flow is expected to do. Let's see, click. So, free cash flow. Okay, so it's not bad at all, I would say. This is free cash flow growth for DraftKings expected. It's expected to grow quite rapidly. 82% growth in fiscal 25, 73% growth in fiscal 26, and then another 35% growth in fiscal 27 to reach $1.7 billion. So you're paying approximately 10 times fiscal 27 free cash flow for this business. It's not that bad, I would say. Not that bad at all, especially if they do get into this gray area of prediction markets, which they are after yesterday's announcement. They are acquiring a company called Railbird, the new predictions app. And then they can just integrate everything that they've been doing. But okay. 3 minutes until the open. 3 minutos. Thank you for a super chat. Any videos or guides you recommend to understand TradingView better? No, I never. Just play around with it. Play around with it, and then if there is something that you're looking for, then just Google it, or Google it, or check some YouTube videos. But no, I honestly, I only use TradingView for these types of things. Watch list, some charts here and there. Some other people, again, because I use the free version. When you pay for it, then I guess you would like to know a lot more about the website, because here you are limited a little bit with how many indicators you can turn on at once. Some people like to put volume here, and some other indicators out there as well, but I only use this one to show it during the live streams, during some videos, have the watch list here and there. Sometimes, of course, look at some technical analysis. So no, I didn't really need much education on the platform, I would say. Yeah, what's going on with this thing here, right here? Beyond Meat, it's up like 1,300% or so. This is crazy. So, Beyond Meat, yeah, from the bottom, it's up 1,300%. Crazy stuff. I don't know. I don't know anyone that eats it. So congratulations, whoever managed to pick this up at 20 cents or whatnot. Congratulations. But I am pretty certain that this ends up going back down 90%. I think that's what's going to happen. Of course, he likes and understands the business. Man, how long did it take you to write this? Like capital letters, small letter, capital letters, small letters, capital. It's a shame you cannot attach like a GIF here. You can put like the SpongeBob one. Beyond has 60% short float or something like that. Yeah, I did see that it did become a lot more liquid over the past couple of days, and that's probably one of the reasons here. Market is about to open, ladies and gents. So we are going to open the market right about now, I think. Yes, markets are open, ladies and gentlemen. Ding, 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 bing, bing, bong. Markets are open. We have, okay, again, the heat map is not updated, so don't freak out by what you're seeing right here. Just focus on this side where we have a lot of red right now. We have a lot of red. We have some green. We're going to let the watch list update over the next couple of seconds, but we are open. Markets is open. Ding, 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 bing, bing, bong, bing, bing, bong. I did see someone in the chat that is called bing, bong, bing, bong. I think that's why I got my, that's where I got my opening bell ringtone. But unfortunately, we have, again, a lot more red than green. We have Applied Digital that's green, only 2.4%. Google, only 1.2%. New 0.8, and the local, every time the same thing. Duolingo 0.3%. As for the rest, okay, heat map has been updated. It's flat for a lot of these names. Here we have APH up 7%. No idea who that is. Netflix is down. Well, Netflix is down 8.5%. This is probably AppLovin. Yeah, up 2.7. Amazon is down a little bit. We then have here T-Mobile down 3.2. AT&T, I think AT&T reported. So They're down 4.8. I assume this is Verizon down 2.6. So probably because AT&T said something um, and brings down the other two players. But all in all, let's have a quick look at all of the names that we do follow. So we have AST down 8.7% right now. We're back at $70. We have here Rocket Lab down 3.2%. Actually, I didn't notice that Rocket Lab dropped a little bit. It did spend a lot of time here trying to go above $70, but again, same rationale right here. Rocket Lab went up a lot. Yes, we've got some extra contracts here and there, but essentially we're still waiting for a Neutron update. Marvell is down 3.6, so this one is also pulling back after it has gone up 50%. So this one's pulling back a little bit. Let's see where the bottom will be found. BMNR still at $50. I still have my shares, but someone asked me yesterday, am I going to take profits of what stocks am I going to take profits from to add to other positions? And if we're getting, let's say, a nice crash or further correction or pullback, I'd say, from for Nebius or whatnot, and I really need cash, then I would probably go to a position like a BMNR and take money out of that. Zeta is still around $90, down 1.8. HIMS 2.2. Rubrik is down 1.7. Reddit is back around $200, down 1%. Amazon 1.4. Intel 1.6. Intel reports tomorrow after the close. The local down 1.5, still at $15. Shift 4.8. PayPal down 1.6. Yeah, it's still here at around the 50-day moving average. Iron is actually flat. Iron's actually flat, so a nice recovery. Oscar down 1.7. We have CoreWeave 1.3, that's down. Micron is down a little bit. Uber is down a little bit. We have here United Health down 1.1%, still around $360. Robinhood pulling back also a little bit, making its way to the 50-day moving average here. AMD still in a very good place. Meta, Nvidia, all flat-ish. Palantir is down 1%. SoFi almost 2%. Duolingo is now also flat. And Nebius is also down 1% or so. So, and then we're going to have a look at the names that are not on this list. Mercado Libre is down 2.2%, so we're back under $2,100 for Mercado Libre. Adobe is flattish, 0.7%, $355. Assume Salesforce is still the same here, yeah, $260 for Salesforce. Sezzle down 1.1% at $74. Dave's probably 225, still unchanged there. Figma is at, okay, Figma is going back to pre, let's say, big move after that Google announcement. So we're down another 3.2% here, $54. We've got Klarna, also $36, 37. Affirm is at 73. So also a lot. We have seen markets might be at or close to all-time highs, but as you can see, a lot of the names have pulled back double digits, like 10, 15, 20% or so. I would say that's good. What other name do we usually look at? I'm actually going to cover this one pretty soon again. Transmedics up actually 1.5%. This one reports also Wednesday, so next week. Roberto, thanks for the super chat. So what do you do when buying the dip on a company makes it become too large of a position as percent of the portfolio? That's a good question. I guess on its way to becoming bigger and bigger, you've been buying the dip, so you can just stop buying the dip. Or if it's really super cheap, then for a short period of time, you allow the company to become a bigger chunk of the portfolio, and then eventually when you are proven correct and the stock does recover, you might want to take some money off the table for it not to become too big, I would say. But yeah, when buying dips, I guess again, when you buy a stock and it goes down 5%, I don't think you should like load the boat, because like, well, what's 5%? If you start to see 10, 15, 20% retracement, that's usually when you, especially at 20%, that's usually when you buy a bigger dip. You buy the whole, you buy the crash. But 5%, 3%, it's not really a dip worth buying, especially if your average is very close to the price that the stock is at right now. Now, in my example, or in my case, Rubrik and Shift 4, those are new positions. And so as time goes by and the stock doesn't move, I'd be stupid not to buy at the same price. Of course, if we get more information, and in this case, for Shift 4, November 6th is the next earnings report. We'll see what happens there, and I'll accumulate accordingly. As for Rubrik, when do they report? We still have a lot of time for until that. So here again, as time goes by, and if we do stay under 80 or around 80, it allows me to just accumulate more and more shares. Because if I liked it at $80 a month ago, and it's still at $80 in a month time, then and nothing changed, then why not? Why not accumulate more? Because also in these two examples, those are still small positions in the portfolio, well, as a percent of the overall portfolio. Let's see if we've got some evolution. Actually, evolution. Evolution AB reported, I think, this morning. I think. Let me actually check on that. Evolution AB. Let's see. Or maybe tomorrow. I think tomorrow. Okay, tomorrow. Evolution AB is, yeah, I think tomorrow. So not this morning. Apologies for that. So Evolution AB is also tomorrow. So that means we can probably also in the morning. Tomorrow in the morning. So we'll have some things to discuss. In the morning. Of course, we'll probably discuss also the Tesla one. Other than that, oh yeah, well, what's the fake meat company doing? It's up 50% today. Incredible. Incredible. Imagine like you put 10, not 10, who puts $10,000 here? Put like even 100 or even 1,000 you put here. Like poof, vacation paid, or your rent is paid for the next couple of months. Any expectations from Tesla today? I think, again, based on the numbers that we've already gotten from them, right? The production delivery numbers, the energy numbers, I think they beat. And then it's again a story of an earnings call not being super boring, and actually getting answers from Elon and the team. Because if you've been following the Tesla earnings calls for many years, like I did, it gets boring sometimes. Like you get a question, okay, early days the questions were a bit stupid, but it is what it is. The answers are super long, and it's like, oh, but I hold the shares, but every time I hear like, yeah, I think Tesla can become $1 trillion in market value, bigger than all the other companies. I'm like, okay, cool, but that's not what we want to hear right now. We want to hear what's coming up, like what's on the roadmap. I want to hear, because I love that product, I want to hear more on the Tesla Semi. Supposed to be the end of this year that they are starting to ramp up. Are we going to get an Optimus event pretty soon so that they can show off what they've been working on? That would be great. And then, of course, just timeline stuff. We know that Elon time is fake time, but any real news would be great. The energy business is going to be printing money. I mean, you look at how much energy you need with all these data centers. It's like a no-brainer for Tesla Energy, the battery storage stuff. it's going to be making billions and billions at high margins. At high margins. Palantir is not down 20%. No, it's not. No, Palantir is crazy. Palantir since the peak, because we're only looking at peaks, it's only down 5% or so. This thing is holding up like a king. Insane. And they are reporting Monday, November 3rd. Iron is actually green right now. Iron is actually green right now. So it did, I guess, have a little retest, down 30% pre-market, now only down 25% or so. What else is green? Well, it's not green anymore. Sorry about that. Google is up 2% on that Anthropic news report. So give your share. Please share your thoughts on the upcoming Nebius lockup expiration given the high share price. Well, usually lockup period expirations means pressure on the stock. So my opinion is, if we do see pressure on the stock, especially, I mean, we are seeing today some pressure, down 2.7%, flirting here with $100, we'll see, right? Because after the Microsoft announcement, it jumped, peaked here at around $100 or so, went back under $90, and then we broke out of it. Could this $100 psychological line here become a support area? Could very well be. Now, with a lockup expiry coming up, could it put pressure on the stock? It could. But depending on what they tell us during the earnings report, it could also not. Right? Because if the results are, in my opinion, they'll beat it. In my opinion, we'll also get an updated ARR guidance. The stock can stay at those prices even with a lockup period expiration. But yeah, usually a lockup period expiration does put pressure on the stock, which is what we've seen with which company? Well, CoreWeave was one. More recently, there was Webull as well, which, now that I talk about this, what has still 11? Still 11. So yeah, it does put pressure. But luckily for us, good companies that report good earnings should be fine. Bruno, would you say Nebius is dropping faster than... Yes, I would say that. Especially after sacking 2 managers. And we're not even in December yet. But yeah, Sean Dyche back in the Prem, which means Forest fans can enjoy 0-0 games, 1-0 games, super defensive play. Historically speaking, if you do what Forest has done, you are getting relegated. It's happened with, I think it happened with Southampton. It happened with, wouldn't be surprised if QPR and Cardiff are on that list as well. But yeah, the owner is a bit out of control. When is the October rate cap dropping? Next, wait, I'll tell you exactly when. 7 days, 4 hours, 14 minutes. We are here at 96.7% probability of a rate cut in October. Again, that happens 7 days, 4 hours, 13 minutes. Why is the Premier League your favorite? Well, probably because I follow Chelsea, but it's my favorite because it's a very competitive league. Now you might say, yeah, but look at the last 10 years, who won the league? It's only two or three teams. That is true, but the league itself is quite competitive. The fight for top 4 spots is very competitive. The fight not to be relegated is quite nice also. And then yeah, it's more enjoyable than to watch La Liga when you have like 4 games a year where something happens where it's interesting. Serie A is very interesting lately, very interesting. Bundesliga is just enjoyable because I don't know, it's quality stadiums, quality fans, quality teams, good football, I would say, majority. Although the dominance of Bayern and yes, we had Leverkusen a little bit, but it's an enjoyable league. But to me, the Premier League is the best. Is the best. Arne Slot needs to go. I mean, he won you the Premier League last year. I don't think he needs to go because he lost 3 games in a row. But yes, losing against United at home is probably a sackable offense. It's probably a sackable offense. Next Thursday, Nottingham Forest against Port. Yeah, true, because they are in Europe. They are in Europe. Really? Well, go watch a game. London is red. Nah, never until never. No, I mean when was the last time Arsenal won the league? Yeah, 20 years ago, 21 years, 22 years ago. Long time ago. When was the last time they won the Champions League? Oh, that's right. Never. Are you following FWONK? I assume that's the Formula One. It's the Liberty Media for Formula One thing. I don't follow it, but Emir did a write-up on it. Type of Capital. He did a whole Substack write-up on this one. I just follow Max and Ferrari. I know 2 different things, but who do I think will win? Who do I think or who do I want? I want Chelsea to win the Champions League. Do I think it's feasible? Anything's possible in the later stages, but who do I think will win? PSG are playing well. Barca are playing well. I dislike both of these teams, but it is what it is. Yeah, I wouldn't mind seeing Bayern München win it. I wouldn't mind seeing that. Harry Kane is, in my opinion, one of the most underappreciated strikers in the world. This guy is scoring goals every single week, passes like he's Cesc Fabregas sometimes. And for some reason, people do not put him in the category of the best of the best of the best strikers. I don't know. Maybe it's because he comes from Spurs. Okay, understandable. But if you look at his track record goal-wise, it's insane. It's insane. Okay, Iron is up 1.8. I don't know how we went into the football conversation, although tonight Chelsea plays Ajax. Interesting game. Michael Olise is one heck of a player from Palace, of course. From Palace. Applied Digital is now only up 0.7%. Google is still up 2. New 0.6. Micron still holding here above $200, so that's good. Do we have... Okay, Nebius is still at around those prices, same prices, $103, $102 or so. We do have Oscar that's down now 4%. I'm telling you, this thing is like, for traders, this is a money-making machine. Like you go down a lot, then you go up a lot. You go down a lot, you go up a lot. Like you could have made, if you're a professional trader, you could have made millions just over the past couple of weeks with Oscar. Iron up, but on very small volume. Yeah, I'm not surprised, but it's see a nice rebound from being down. What was it, pre-market 5% to now being up 2.7? So it's not bad. Not bad. Where is our favorite pain pal? Down 2%. That's not great. We have to be above $69. It's a nice number, but that's where the 50-day moving average is at. So we have to be above that. Couch investor, are you invested in Nebius? I am invested in Nebius already since the low 20s. Yeah, I am. I'm a big Nebius fan. Investor. Chelsea fan. I mean, he played at Chelsea. He won the league at Chelsea. He won quite a lot at Chelsea, actually. But yeah, not too, because Fabregas is top of mind right now because I watched some clips of Como. He's the coach there right now, and yeah, no, I love Fabregas. Of course, he was an Arsenal player before, but who cares about that? Who cares about that? I know, which is why I thought he would sign for us again, but I guess he chose the easy way. Chose the easy way. Why did Alphabet pull up again after the news of OpenAI's browser? Because the OpenAI browser is just another browser out there, just like Perplexity, Comet, just like all the other browsers out there that were supposed to kill Chrome. But how many people are actually going to switch their browsers? Not that many. Plus, again, it's basically Chrome with like an added ChatGPT on the side. Wow, big freaking deal. And again, this is something that Chrome will do, is doing. If you are a Gemini Ultra subscriber, you have access to Project Mariner. It's the AI agentic browser. Nothing changes. And yes, of course, Perplexity Comet and OpenAI's Atlas browser are both built on Chromium. But again, Google doesn't really make money from it, so it doesn't really change much. But the news why it's up, it's because of the Anthropic report, that Anthropic might use a Google Cloud, and the deal might be worth tens of billions of dollars. That's why the stock is up. That's why the stock is up. Josh, I answered your question yesterday 3 times, but since you're here again, I guess you did not get the message. Thoughts on the local earnings? Yes, I do think it will be as good as last time, although you might have some FX fluctuation, maybe from Argentina and some African, maybe some African countries as well. Do you know anything about agentic tech? Like the term agentic tech, or is it specific company called agentic tech? Let's actually see agentic tech. No, again, I don't think it's a company. So you're asking about the tech, like AI agents specifically, or something else? I do think that Google could do better with implementing Gemini in the browser. Yeah, but I think that's something that's. Don't forget that they had that overhang. They didn't know whether or not they had to sell Chrome or not, so they probably didn't want to launch everything and then, oh, actually you have to sell it. But it's definitely coming. It's definitely. I mean, it's here if you are like a Gemini Ultra subscriber and all of that. But it's them not making Chrome an agentic browser is going to be stupid. But I think it's coming. Opera also released an extra deep research agent for the Neon browser yesterday. I also saw a Brave, right? The Brave browser. They released like a whole research how Perplexity Comet is actually not that secure when you're asking it to go look at some things in your browser. They're going to do the same thing with OpenAI's one, so that's going to be interesting to see, because it's all great to have like an AI agent and all, but if there are some security issues with it, then problem. PayPal's third quarter earnings are. How do you know that PayPal's third quarter earnings are lower when they report next week? Neil, it seems nobody in the chat got TTM. To me, TTM is trading 12 months, but I guess it's a company. Titan Minerals. Another mineral company. 50 cents. Ugh. Penny stocks. I don't check penny stocks. Like too speculative. Way too speculative for me. Don't forget that Google was busy with the Chrome. Yeah, exactly. Yeah, okay. The chat is a bit delayed here. So yeah. Agreed. I guess I don't just search the internet anymore. I just want AI results. Yeah, but I mean that's what AI mode and AI overview is for. It's basically that it's basically a Gemini and a ChatGPT in Google. Like you go, you look at something, you get your AI overview. If you like it, great. If you don't, you just continue AI mode, and then you have like a conversation. You have a conversation just like you have a conversation with Gemini, or ChatGPT, or Perplexity, etc., etc. MP Materials, again, they've got their run up. They've got that investment from the United States, from Apple. So I guess they'll do well. I guess they'll do well. Okay, so TTM. Best Chelsea player you like right now? Well, other than, well, Cole Palmer is probably our best player, talent-wise, but the best player I like, it's probably either Caicedo or Reece James when he's fit, which luckily for now is a lot of the time, so that's good. But Caicedo is a beast. Pedro Neto, underappreciated. Pedro Neto is underappreciated. And Joao Pedro is a work beast. Like workhorse is this guy runs. He's the only striker we have right now, and this guy is crazy. Such a good striker to have. Good striker, but best player right now that I like, Caicedo. Okay, TTM technology. Am I going to watch the World Cup in person? Well, I tried with the Visa pre-sale, but I never got an email, so I guess I didn't make the cut. And apparently, they sold over 1 million tickets already. So, chances of me attending it live are now getting smaller and smaller because I don't know. The general sale is probably going to be attacked by bots, and pricing is going to be crazy as well. So we'll see. We'll see what happens. The plan was to go watch it, but if it's not possible, it's not possible. I'm not going to like pay tens of thousands of dollars to go watch it. Okay, so TTM. Favorite Chelsea player of all time? Well, to me, it's quite easy. It's Eden Hazard because I am Belgian, and I think he was the best player that ever played for Chelsea. But if I cannot choose him, then it's Lampard. Then it's Lampard. Easy choice for me. But of course, I mean, Drogba is probably in the top 5. Probably in the top 5. So they engage in manufacture and sale of printed circuit boards worldwide. The company operates in 2 segments: PCB, which is the printed circuit boards, and RFSS. Small company, margin growth, okay. The rest, not great. Growth-wise is not incredible either. Full port to Ticketmaster, yeah. Are they public? No, they're not public. Ticketmaster, they're not public, but someone else is public, no? Forgot who. Do I have an FPL leak code? Yeah, I think I shared it once. Let me actually share it again. Let me share it again. I'm not doing well this year, I can tell you that. Let's see. FinTwit. Okay. I put it in the chat. I have put it in the chat. Do Belgian players communicate in Flemish, French? Yeah, that's probably all of the above. Probably all of the above, which is probably why sometimes we don't really play that well. But I would assume that, I mean, the Flemish-speaking players can speak French most of the times, not all of the time. The French-speaking players don't really speak Flemish. So maybe English is the way to go. Yeah. Maybe English is the way to go. On Corey's website, they mentioned Google as a partner, maybe future announcement coming. Yeah, but Google as a partner, what does that mean, right? Does that mean the use of Google Cloud? Partnerships on websites can mean a lot of things. Are you using leverage for investing? The only sort of leverage that you can maybe say is the options, the call options play. But no, I don't buy 2x, 5x type of stuff. We should talk about more about the far inverse of. I mean, yeah, we do have a little bit more green than red, although PayPal is also up a tiny bit, but not much. Give my opinion about the government shutdown. It's supposed to end soon, no? Or actually, let's have a look at the unregulated prediction markets. The U.S. government shutdown. Let's look at Kalshi because I don't think Polymarket works here. Let's see. Kalshi, where are you? No, this is Kalshi News. Why can't I get... Wait. But my thoughts on it is... I mean, you want to prevent government shutdowns. Every single day that there is a government shutdown, the politicians in play, every day that passes is a day that they won't receive their paycheck, and then we'll see what happens. Okay, so right now it seems like 70% say more than 35 days, 49% is more than 40 days, 37% a chance of more than 45 days. Right now, the forecast sits at 40.3 days. Interesting. Yeah. Interesting. But yeah, you have to put incentives, right? Or you look at the incentives. It's the same as what is Buffett said it or Charlie Munger, right? Show me the incentive and I'll show you the results or something like that. With politicians, it's the same thing, especially the career politicians. It's not possible that you can be 40 years in politics and your results suck. Because in every other business or position, you're an employee of a company. You don't deliver, you're fired. You're an executive of a company. The company doesn't deliver, you're fired. You're a football player. You don't deliver, you're going to get sold. A manager of a team, a coach of the team, your team sucks, you're sacked. But in politics, for 40 years, you can do absolutely nothing, become wealthy because, well, you earn quite a lot of money for doing absolutely nothing. And that's fine. I mean, presidents have term limits in the US. You can be president twice or you can be president for 8 years, and that's it. Why isn't it the same thing with these politicians? It's like, I don't know, doesn't make any sense. Like if a politician is doing a good job, okay, great. But if a politician is doing a bad job, then why the heck is he still or she is still in power? It doesn't make much sense to me. Doesn't make much sense, but I guess that's how you get to a state where right now things don't look that great, or things haven't looked great financially, fiscal policy, and all of that for many, many years. But it is what it is, unfortunately. I still think that AI should replace a lot of politicians, but yeah. Anyways, we'll close out the stream here with a bit more green than where we started. Hopefully, when I finish the stream, we're going to go a bit more in the green area. Nebius is still here at $102. We have SoFi that's down a little bit. PayPal is down a little bit. Oscar is down. Iron is now up 1.5%. So that's fine. All in all, the heat map looks like this. A bit mixed for some of the names, but all in all, it's not that bad. So thank you all for joining me this morning. We will be back tomorrow, of course. Tomorrow might be open and close. If not, it will definitely be closed because of the Intel report, but I'll let you know for sure. Tomorrow. So thank you all for joining. Have a wonderful rest of your day. Enjoy the football later today.